Three, two, one, and we're live. Starting off with a good stream. It is the day after Christmas. How you doing, friends? This is Ernie with the Trader of Futures. And today is day 12. 12 of 12 of the 12 days of trading. Yep, it's my official holiday. It's kind of like Festivus, Christmas, Hanukkah, anything else you can think of. But it's my 12 days of trading. Today is day 12. Today is the apex, where we have a rather volatile market to start off after that horrific fall. Down like an elevator. And we may see up like an elevator as well. Don't know. Will this be a V-bottom? Will this just be a dead cat bounce? Nobody knows. Very difficult to trade. Get all skittish wondering, should I get in here? Should I get in here? Should I get in here? Oh man, I knew I should have got in there. If I got in there, I would have made a shitload of money. Then I missed it. Oh, I'll get in here. Oh shit, it's going the wrong way. Get out. Oh, damn, just lost another 500 bucks. Does that sound like you? It's a lot easier just to sit back and wait. Drink some coffee, take a chill pill, and wait. Don't let the market play you. You're here to play the market. I have my my holiday unshaven face on. I am not going back to the beard. I just haven't gotten out yet to purchase any blades. Haven't had any blades around the house for quite some time. I typically will use, to get the sides, I was using my shears, and they don't really go all the way to the face. I had one blade left when I did cut it off, and it was a single edge blade. Ugh. Single edge blades, they suck. So anyways, it is the 12th day of trading. And these 12 days have encompassed a lot, both in the fiat marketplace, futures, forex, equities, as well as the crypto marketplace. I think the oh, who the hell's calling me now? Of course. How you doing? Not much. You have this propensity to call just when I start my show. Yeah, and did it pop back too? Well, I mean, like the market. The market went down, then went way up, and then came back down. Yeah, the market right now is now up 14. At one time, it was up like 40 points, and the Dow was up like 200, and then it came down again. Now it's up 86, 88. It's climbing again. I am live on the room, so we can take this all up at a later time. But right today is the 12th day of trading, so today is the day that we tell people they must get into the AI trading setups. All right, give me a piece of information. No, that's good. That's good. So all the Forex trades that we had on were taken off with gains. And we're down on ES. So up on oil, up on Forex, down on ES. Okay. All right, man. Thank you. Bye. Yep, so there's the, let's see. Nick says, I think it's better to sit out tops and bottoms because it's so hard to nail and just trade established trends. I agree with that. No signs of a bear market, Tone Vase says, on 18th of December 2017. So, how is the crypto market doing? How is the crypto market doing? Oh, look at that. All right, so I had drawn this neat little line here that I called the beginning of a head and shoulders. I actually drew it right about this point where this first arrow down was. And, you know, the head and shoulder hadn't formed yet. But here it is. It has formed, and it looks like now it has broken through it. You know, it's a little prescient, I guess. But, you know, drawing lines, everyone likes to see lines, so I drew lines for everyone's benefit. And so now crypto is coming down. My prediction is that it will end up in the low $3,000 range, right around this target area, which is around 3,350 or so. So that's where I think it's going, at least in the, you know, in this leg. In this leg, it has many legs. So there we are. There's the crypto market, still in a bear, not in a bull. A lot of people thought, "Oh, this is the second coming. I'm sure Tom Lee, the cuck on CNBC, who talks like this, but Mr. Bubblehead thinks that crypto is going to 15,000 by the end of the year. No, I think he said 14,000. We'll give him one more thousand. 14,000 by the end of the year. Let's see, you got just 5 days. I don't think so, Tom. I think you need some oil for that bubblehead. It's getting kind of squeaky. So Tone Vase now is, he was bullish on the 18th of December. You know, I'm not going to fault him for that. Let's see. On the 18th of December, where was the market? Oh, here he was bullish when it started to go down. Yeah, I had no idea even at that point that it was going to go down so hard, because even at that point it was still above this hammer here that was placed on the 10th. That's the 14th. Oh, so here he was bullish? Well, that's, yeah, once it goes past the tail of the hammer, then it's just in for a ride. You don't know how low it's going to go. You're hoping that it's going to stop anywhere there and go up, but if it just keeps on going, it keeps on going. This, to me, this move has been, do I want to say enlightening? Enlightening is the wrong word. It's a little bit of a panic, I think. Kind of manufactured. What other words can we use? Some people will claim that, oh, it's just rebalancing, you know. Nothing to worry about. Bonds also reacted dramatically. Interest rates dropped dramatically. As a matter of fact, I have something to show you. So I'm going to show you my latest yield curve. Now I've shown the yield curve in the past. Let's see if we can get that up. Okay. Let's see if I can get another yield curve out here in the past, in the recent past. I think I've dumped most of them. I'm just doing a search for any graphics that I may have created. Let's see here. Did I dump them all? I might have dumped them all. Well, anyways, a lot of people were talking about recently an inverted yield curve where the short-term rates were way up here, and they were in fact inverted. At least the 2-year versus the 5-year was inverted. The 2-year was higher than the 5-year. But they dropped dramatically. I mean, look at this drop. That is a hell of a drop there. I mean, the curve was up. The curve was actually up here. Right? And it was almost flat. So what happened? Well, let's see what happened. Let's go to the short term ZF, the 5-year note. So what happened was this incredible move in rates. Well, it's hard to see there. It doesn't look that incredible from here. Maybe the 2-year is the one I need to look at. What is that, ZU? No, the 2-year. That's the 2-year swaps. Oh, they have the 3-year note? Do I want the 3-year note? I don't want the 3-year note. Let's see what the 3-year note looks like. Oh, they don't even show it. Maybe we can go to Flounder and Drown, otherwise known as Think or Swim, and put in, what is it, ZT? Yeah, ZT. Oh, I'll just go back there. I thought it was ZU, but it's not. It's ZT. I'm thinking Trade Station. So anyways, ZT. It's the 2-year note. Ah, there it is. See this move here? That move there dropped interest rates dramatically. These two moves, boom, 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 and they went way ahead of the 5-year, the 10-year, and others. And that all resulted in this yield curve. Now the 10-year was actually right about here, and it went across like this. I don't know if I can draw on this. Can I draw on this screen? That'd be cool if I could draw on this screen, but I don't think I can. Let's see if we have a drawing option. Display capture, game capture, image, slideshow, jack input client. What is a jack input client? No properties. Okay. I don't know what a jack input... Oh, that must... I don't know what that is, so we'll just remove that. But anyways, the yield curve was up here. You know, the 2-year was way up here. And it was inverted. And on that move, it dropped down. Now, this blue line here, I'm talking about the orange line. So the orange line was almost completely flat as of last week. The blue line is from February of this year. So you can see that overall we've flattened, but compared to what it was on Friday, it was completely different, you know, where the line was above this blue line. So there's been a dramatic change in interest rates. Even though the Fed decided to raise interest rates, the market said, fuck you, we're lowering interest rates. And so they lowered them. Now that's kind of interesting. They lowered interest rates and at the same time the market is still dropping. So I think, you know, everything's all discombobulated, a technical term. A draw on screen tool for Mac. Well, thank you very much, Jacob. It's an app. Let's see if I can bring up the app. So we have apps. Draw on my screen. There it is. Draw on my screen easy. Add temporary notes on a screen, overlaying other apps. That's pretty cool. All right. Let's get that. Let's see if we can do this in real time. We're not even buying. This is free. Let's open it up. Welcome. Okay. To draw, press and hold the Command-Alt key while moving the mouse. To erase all, press Command-Control. So Command-Alt and Command-Control. Okay. Let's give this a shot. We'll close this. We'll bring back the Excel sheet. And we'll say, see, yeah, there we go. It looked like this. That is so neat. Thanks, Jacob. That's what the, that right there. Now, can you see that? I'll put the chart. Can you see that red line that I drew? That is what the yield curve looked like on Friday. All right, and this is what it looks like today. That is a really neat tool. Now I got to figure out how do you modify it. Let's see. I guess that's it. That's the features. If I want more features, I'll probably have to buy a different version. See, now you got me hooked. Draw on. Oop. Draw on my. So there is a a $7.99 version. What do I get for $7.99? All right, we got more messages. Oh, unrelated. Sorry. So for $7.99, I can draw anytime on my screen, either through a mouse or a touchpad. I suppose that I could use a stylus too on my trackpad. And I get to change the colors and thicknesses and all this other stuff. Now that's a nice tool, and it's simple. Well, I think I'll get that. We'll buy that. Now we need to download it. First we need to close this one and then open this one. So it gives me these controls. So I can choose the hotkeys by default, and then the eraser. Well, the eraser right now is Alt Control. That's what it was before. And Alt Command draws, erase controls. Oh, I see. Control. Command Control. Let's see. How about Command Control? I'll do all three. Yeah. And then Command Control. So I'll do Alt Command Control will erase everything. Oh, that allows me to erase portions. And Command Control just gets rid of everything. I have to remember this. And then I have the lines and the colors. Let's stick with red. Very nice. I can choose the transparency. Awesome. So as I said, oh, it's not on. By closing that, did I get rid of it? There we go. Alt Command to draw. Oh, that's thin. I want thick. See, when you have too many options, the easy one was easier. I think the easy one, the one that cost less money, was better. It was just easier. All right, so I can get presets. Now see, I chose the color. Yeah, see, that's too thick. But anyways, I think you get the idea. See, now it's in reset chart. All right, that got rid of it. Or did it? Very interesting. Yeah, I think the free one was actually worth more than the one that costs money. So anyways, we can see the 2-year, it just took off, and that brought interest rates down. Now, did we get a similar move on the 10-year? So that would be ZN. So no, we didn't get the same move on the 10-year. You see that? It's just it moved up, but nowhere as much. And what about the 30, which is ZB? And really, no move of any significance on the 30 at all. So the short end of the yield curve really just shot up ahead of everything else. In other words, the interest rates on the short end went down, thereby erasing the whole idea of a flattened yield curve. So now this is what our yield curve looks like, this orange guy. I mean, it's still, I would say, relatively flat. But compared to last week, no. And we're not inverted anywhere on the curve. Now, that'll make some people happy, you know, thinking, oh, we inverted an inversion. And therefore, everything is good now. But I think what this really just tells you is that what the hell do we need the Fed for? The Fed's sitting there, you know, tweaking things a quarter point at a time, and then the market just took it all in their own hands and said, fuck you, we'll just do what the hell we want and put it where we want. This right there is a case for abolishing the Fed. There's Ern's case for abolishing the Fed. Completely unnecessary. Of course, you'll have all the economists out there because they like to get their sticky little fingers in everything. News Unit wants to know, does the drama ever end on YouTube? No, it doesn't. Boogers guy. Short every S&P rally till it hurts. So now you're using the my Bitcoin mantra with the S&P. And I'm not so sure that that's the best thing to do. Not so sure. As you can see right now, it is moving up off the bottom. That's a 5-minute chart. Let's go to an hour chart. Let's do some auto. There we go. So here's an hourly chart showing the big move down. Look at that move down. Whoa. Going down, down, down ever since the beginning of the month. Bam, ba-bam, ba-bam. Then big, huge chunks down till we finally hit a bottom. A painful bottom. Now we're moving up. Now, is this a dead cat bounce? Or is this actually the bottom? Did the plunge protection team do anything? No, they didn't. They were absent. So yeah, you can't see that. So there. That's the hourly chart going down. Let's do a daily chart and see what that looks like. Holy crap! Like falling off the edge of a cliff. Look at that. That's friggin' disgusting. Yep, since the beginning of December. Ah! And so now we're putting in what looks like a strong doji on this last candle. Is that a reversal pattern? Well, one thing I can say is that there can be an argument made that this move right here, we'll zoom in on that. This move right here is another of one of my famous three-line strike moves. That's where the down body completely encompasses three of the previous up bodies. You see that? And then it just went down from there. That is the highest probability chart candlestick pattern that there is. A three-line strike right there. Banga, banga, banga. You know, and if you're going to use candlestick patterns, most of them are totally bullshit. But there are a top 10, and I went over them in one of my previous videos. Yeah, I don't know why I wasn't paying attention to that, but that's what that is. I mean, that's as clear as day. That's a three-line strike. You might be asking, where do I get a three-line strike? Well, I'll show you where you get a three-line strike. So we're going to bring a window over here. I'm going to bring up my, let's see, my best candlesticks right here. Open up a new tabs. These are all from the Thomas Bulkowski site called the Pattern Site. And the number 1 and number 2 best candlestick pattern. These are the top 13. Actually, some of them are the bullish and bearish equivalents. But the number 1 and number 2 candlesticks are the three-line strike. Now in most other websites, and so Thomas is being kind, I think, to most other chartists out there, because they call this right here, this pattern, they call that a bullish continuation, but it's not. Because Thomas Bulkowski has done the work, done the homework, done the statistical analysis, and shown that this is not a bullish three-line strike. This is, in fact, a bearish pattern. And as you can see, he's showing that it's going down. But they call it the bullish three-line strike. Don't know why. Bunch of fools, idiots, idiot fucks, frigtards. But there you go. There's a down candle that encompasses 3 up candles. Now tell me, is that what we have here, or is that what we have here? A down candle that encompasses the body of 3 up candles. Right there. And so we shall use, let's see, what are the hotkeys again? Alt, Command, Draw, Line. We'll use that line. Right there. There she is. That was pretty big, huh? We'll do that one more time. Now I think I can erase this. What is the erase function? The erase function is Command Alt Control. All right. Oh, that gets rid of everything. Huh. There's your three-line strike. All right, then we'll bring this up, and you'll see that three-line strike. So the question is, what do we have now? These are the top candle patterns that I have here. 3 Black Crows, Evening Star, Tasuki Gap, Bearish Engulfing, Inverted Hammer, Falling Flag. I don't see anything here yet that matches. All of this is mostly, let's see, Bullish Abandoned Baby, that's not it. No good bottom patterns. It's about as close as you get, but we're not piercing here. It's a piercing bullish reversal. So what I'm saying here is if we maintain what we have here, right now this is what you would consider a harami. And harami is a Japanese word. And what do you think harami actually means? Do you know what harami means in Japanese? Harami in Japanese means pregnant. So right now we have a pregnant pattern because this is supposed to be like the woman's body. Then this little doji here is supposed to be the belly, little prego. And so a harami. Let's see. Let's go back to Bukowski, and we'll go back to the home page. We'll look up candlestick patterns. Got to go all the way to the bottom for the good stuff. Top 10 reversal. Now let's see if that's in here. So we don't really see, we have the 3-line strike. The 3 stars in the south, that is the best reversal. But we don't even have a harami. We have the outside up, 3 outside up, which is similar to a bullish engulfing +1. So this pattern that we have here is not a strong pattern. At least it's not in the top 10. So again, my head's in the way. So I'll bring that back, do this over. So these are all the reversal candles. We'll make it a little bigger. But we don't have any haramis in here. No haramis. No pregos. No pregnant dojis. What does that mean? That means that the odds of a harami are not much better than, a little bit better than a coin flip. All of these are about 1 standard deviation, or about 67% chance of a reversal or better. So that's why you would look at these. So we could go back and we could look at haramis. So we have a bullish harami. See, there's your harami. And it's right in the middle in terms of overall performance. And look at this, bullish reversal. It's a bullish reversal only 53% of the time. So that's, that doesn't give you a whole lot of confidence. Only 53% of the time. So that's what we have. Now, I guess one could, if it were a piercing pattern, what does the piercing pattern give us? See, now a bullish reversal piercing pattern happens 64% of the time. That's a significant difference. See, that you can bet on. See, right there, 64% of the time. So Jacob is saying the Fed is less powerful than anyone thinks outside of launching full-blown QE. I would say that what they can do is that they can disrupt a market based on what they do. But overall, their power seems to wane. However, they have been launching full-blown QE both overtly and covertly for some time. And also the balancing of their balance, the rebalancing or of their balance sheet can have significant effect too, if they see really the biggest power that the Fed has is their words, quite frankly. Did your AI system tell you that the market was going to move this low? The AI system has no such predictive capabilities because it only looks at most a 4-day window. So we're not trying to predict the markets going low. We're just trying to capture, low-end swing patterns, high probability swings. And so what I can say is that if you followed all the trades in the AI, then you would have done very well even during this downturn. So James is asking also, when there was a 3-line strike, why were you still long S&P? I didn't see it. You're right, it is a good website besides the 1998 look and feel. Nick says, with monetary control, they can also print up a shit ton of money to buy off the voting population to let them do it as real nice till you have to pay that debt. Yeah. Ernie, you went long on that day. No. I did not go long on that day. Hello. This is Ernie.
Ernie, this is William and Stryker. We've spoken to you a few times this year. You continue to follow a little bit of what we do with developers, and wanted to know if you had it, still developing in TradeStation or Easy Link, which is user trade.
No, I'm not.
Okay, out of that then, I'll make a note of it.
Yep.
Are you trading futures, or do you have any interest in sort of commodity services that Stryker provides?
Not right now, Bill, but thanks. Have a happy New Year.
Thanks for taking my call, and we'll see you maybe in the future if you have any interest on either end of Stryker.
All right, bye. I thought it was somebody else. I thought it was going to be an interesting phone call, but it was a sales call. So, did I go long on that day? You may be right. You actually may be right. No, I don't think you are right. I have to go back and look at that. I'll tell you when I went long. I went long on this day, right here. Before that, after this bullish hammer. And in fact, the first part of the day, I was up big, and then it dropped. And then the next day, it was up. And up again. And then it dropped. So I was holding that position, thinking that okay, these drops are just going to. But that one killed me. I should have recognized that that was a three-line strike. So you're right, I missed that. But you know, I'm just going to hold and bring it all back, and I'm going to trade and gain all of this back. So Thomas Griffey is saying, if a central bank had any power, these Japanese economies should have been in overdrive for the last 25 years straight, yet they are in depression. It's not that they don't have any power, because they do have power, and particularly the Fed. And, you know, I will agree with Jacob that they don't have as much power as we think, that the market ultimately has more power. However, if they did have any power, if they did have predictive power, then they would be a net positive for the market. But they're not. They're not a net positive. I think that they're overall a net negative. Robert Mangano. Whoever hasn't yet read The Creature from the Jekyll Island by Edward Griffin. Yes, I think many people have read that. You know, I think, you know, first of all, the Fed needs to go, and the whole idea of debt-based money needs to go as well. I mean, we got away from debt-based money. We were on non-debt-based money, just flat Congress-controlled money up until Abraham Lincoln, and then that's when the Fed started. He was opposed to the central banks taking over. A lot of people think that that's why he was assassinated. I believe that John F. Kennedy was also opposed to the central bank's power, and some people think that that's why he was assassinated as well. But, you know, those are all conspiracy theories. Just because they're conspiracy theories doesn't mean that they weren't true. Do I believe they were true? I have no idea. Really have no idea. I do know, with a very high degree of confidence, that the Fed is incapable of trying to control this market. And I guess that goes back to Jacob's point, that they don't have as much control as you think. But what they can do is that they can fuck the market up, and they can fuck the psyche, the sentiment of the market up, which can cause a lot of problems for a lot of people. And I think that that's what happens for the most part. The Fed fucks up people, and then they get mad at them, want to kill them. So that's where I think the real problem is. The Fed is a fuck-up. They fuck with your head, they fuck with your mind, they fuck with your dollar. And they don't really produce anything positive. I have yet to see... You know, a lot of people will say that they saved us from a brink of disaster. But how do you know that in 2009? How do you know that the Fed actually saved us? I think all they really did is just put us in more and more debt. And the fucked up thing is that we're in debt with ourselves, and then we extend that debt to other people. We want to bring them in. And we're in this kind of logjam with them, where we have to pay off the debt, and then they are hoping that we will pay off the debt. It is kind of a mutually assured destruction should that whole thing break down. I don't see how that is really a positive force in our economy. But that's what they want. That is what they want. So again, today is the 12th day of trading. I want to bring this to your attention. This will be the last day that I offer this deal. Then it goes back to the regular prices, which is also a good deal. But I am going to probably add one more deal to the mix for the end of the year. But this is a good deal here. This is the artificial intelligence trade setups. Very, very cool. Very cool. So far in our trade room, and just to show you, we have this wonderful trade room that is Discord based in here, where we talk about, where we support all our users. So in that trade room, since we've had the service open in October, there hasn't been a losing day. So let's see, this last thing. Thomas is saying, there you got the point, Ernie. The Fed doesn't give out money, they give out credit, meaning they extend the debt. Yeah. You know, in a perverted, mixed up, screwed up, fucked up, twisted world, that makes sense to somebody. You know? What the only person it makes sense to are the people that are actually extending the debt so that they can sit there behind the scenes and do shit. That's a good point, Nick. Central bank shelves risk failures instead on several mini failures in the market. All risk failures is accumulated into one massive apocalyptic global market meltdown. Yeah, it's like this, again, like I said, a sort of mutually assured destruction. The people who are buying our debt and being the beneficiary of the interest that we're paying on that debt do not want to just dump it all, because if they dump it, then all their shit collapses. And we know that they won't dump it all because their shit will collapse. Because if they do, then we'll collapse as well. So yeah, it's like mutually assured destruction. Michael Jones, debt is money. No, it's not. We will never pay off the debt. We balance the books in the era of Clinton presidency. They don't want to pay off the debt. Well, that's because, from Congress's point of view, they love debt because they can just keep on creating more and more, and that means they have more money to spend. That's the only reason why they like the debt, because they can create their magic money through their writing of laws, and also through their malfeasance, because they can set things up in such a way, they have a bigger plan in mind that will require the creation of new debt, just based on new laws that they create today that grow into big, nasty monster laws later on. Lego Wifey says, my head is really shiny today. That's the lights. It's the level of the lights. Got the lights here. Hey. Light there. Whoop. Camera. It's back. Yeah, it's because of the lights. Let's see. I got a light over here too. No, I'm not stoned. Reverend Tacos Guidos Mananeros. Well, capitalism needs debt. No, it doesn't. I don't think so. So, Thomas is saying that debt-based money creation means if all debt was paid, there wouldn't be any money. So, in other words, are you saying that debt is what infuses the velocity of money? I don't know about that. See that little thing right there? That means that it's at the edge of the green screen, and then I have to adjust the camera. Debt life matters. So it's a little play on words, you know, like Black Lives Matter, White Lives, Blue Lives Matter, Debt Lives Matter. Now, I say kill the friggin' debt. Hang the debt. We don't need no stinking debt. We should go back to greenbacks. Eliminate the debt. Let the Congress just decide what the value of the money is and then go from there. Of course, that will fuck everybody up. How do we get rid of the debt? How do we make good on all the promises? Or do we just default and say, fuck you? Fuck you all! We're not paying the friggin' debt! Fuck you all! What are we up to? Like $21 trillion? Something like that? Yeah, I think that's what we should do. We should just say, fuck you, go away, we ain't paying no friggin' debt. So we've got a nice little comeback going on here, by the way. We're moving up strong. For a second there, I thought we weren't going to move up. We made this initial move right here. Yeah, made this initial move here. We broke out of this triangle this morning. Here, I'll show you. Here's off the bottom. Get rid of my head. So here's that descending triangle or wedge that we saw Monday. And then we just fell out of it. And then this morning, we dropped down even further and then recovered and then faded away. And then since then, we've been moving up. And then we created this other kind of consolidation area. And we started to move way up. And I thought, okay, here we go. So we went up and then died again. Then we went up again, even stronger, and then died even stronger. And then now we're moving up with ferocious strength. Question is, will that be sustainable? Can we wipe out yesterday's, or not yesterday's, the day before's really tough move down? And so far, we're doing pretty good. So that's the Dow on that side. Here's the ES on this side. It's all good. So I draw pretty lines just, for your benefit. And then over here we have, let's see, this is the daily. So we're in really, let's see, if we move in a lot of this other stuff here. Let's take a look at the volume profile. So this whole area here, let me show you. Let me just mark this off. From here to here. I'm going to bring it over here to, I'm going to just show you this sort of volume well here. From there to there. Big volume well right there. Which is also between these two areas of consolidation. We have an area consolidation there. And an area of consolidation there. And this very, very quick move up back in, wow, that was in the end of the summer of 2017. That's what we wiped out there. We took all the rest of that move up and we churned it and then made some new highs, churned those new highs, and then dumped it on all this crap that's going on today. I mean, the economy's doing well, but here we are, we're in this position. I really think that this is mostly manufactured. This is mostly manufactured in a political upheaval. Leaving the little guy to suffer through it. But anyways, I think that we will come up and we will move very quickly through this gray area. We will consolidate in the same place that we consolidated back here. Let's see, let's change the color of that background. So I think we'll have another little bit of consolidation probably right here. Tiny bit. Probably a smaller bit. Probably like this. And then we will move up to here and start churning through all of this. Now when? I don't know. That's what I'm thinking. I think we're going to move quickly up to here. Why do I keep on sticking? There we go. And then we're going to do a little bit of this. And then move up to here. Now, what will happen after there, I don't know. I think that we'll probably consolidate here for a little while in this area. And then depending on how things go in the winter, this early winter, we may break out of this, we may not. So those are the scenarios that I see. I mean, we could go here, or we could go up here and then decide on this next level whether or not that's going to be the launching pad for the next highs in the market. All that seems reasonable. You know, the other possibility is that we don't get out of this morass, that we continue to have, you know, more and more crap come out of Washington, and we hang out down here for a while. Yeah, I won't like that. I don't think anybody will like that. But see, that's what the Democrats are trying to do. Actually, they'd love to see it go down even further. The Democrats and the swamp rats, this is what they're trying to do. They're trying to keep us down here and possibly go lower. This is their idea of fun. Create confusion, turmoil, political strife, hurt the average American just so that they can get at this president and regain power. Because that's the only time that they can actually regain power, is when there are really bad times. And then they come out saying, hey, see, you need us. They create it, and then they tell you that you need them. That's what collectivists do, because that's the only thing that they have to work on, fear. Looks like the metals are on the way up. Usually January is a good month. Interesting. Trade Doc says, looks like an early, ugly reversal. What do you think? I would definitely wait to retrieve before getting in. According to Q, Trump will go against the Fed. Is Q real? Asks Lego Wifey. I don't know. Well, Q is real, but the question is the same. Now, when I say real, I mean that, yeah, there's a real person back there. Are they what they purport to be? Probably not. You know, like this direct line to the president. I don't know about that. But there are too many people out there that now are in the Q cult. So I don't, and the other thing is that I think that the people that are actually behind Q now are not the same people that were behind it originally. All right, let's see. Yeah, that's a good point, Nick. Collectivism works until you run out of people to take from, which happens relatively quickly. And then when it doesn't work, all the people that they took from are in dire need and find it difficult to mount a resistance to the collectivists. And that's really what they want. They want dependency. The collectivists want you to be dependent upon them because that's the only way that they derive their power. Through fear and intimidation, through tyrannical rule. And that is, in fact, what leftists do. Actually, that's what people way on the right do as well. The problem is that the whole world is moving more towards the left, and that's what we're confronting now. These are not liberals, by the way. They are leftists, collectivists, statists. And they are the principal enemy. And unfortunately, the Democrat Party, which was once a party of liberals, then they seemed to shift more towards or stay in the middle, while the parties themselves started to shift all to the left. And now all the liberals then, back in the, I don't know, in the 60s and 70s, as the parties moved, they stayed right where they were, but the parties started to envelop them. And now, the classical liberal today would be considered alt-right. Really, I mean, that's how fucked up it got. So the classical liberals, they didn't move anywhere. It's just that the parties moved all to the left. Actually, I'm going to do it in your view, but all to the left. And then now the Republican Party, or libertarians now, encompass mostly or have great overlap with that classical liberal viewpoint, where the people all the way to the left that were liberals, they have turned into collectivists, communists, statists, tyrannical leaders, and they want death, destruction, power. And right now, I think the Democrat Party is made up of a majority of these people. Godless society so they can get control. Well, then you have to wonder, if it were all the way to the right, would they also be godless? Or would they pervert their idea of a god? So I'm not so sure that it's I can understand what you're saying. There is a large segment of these leftists that are godless, or they have a different type of god. Their god is darker. So it's tough, because I know a lot of atheists that are damn good people that are classical liberals. A lot of people that are agnostic that just aren't sure of the existence of God, or maybe they believe in a higher entity but just don't believe in the religious aspects of things. That doesn't necessarily make them godless or anything like that. I guess the question is, do you need to be attached to a religion in order to have faith? I don't think so.
Market data connection lost.
What they really want you to do is they want you to believe in them.
Market data connection.
They want to be the gods. That's what it really comes down to. So here I am. I'm definitely over an hour here. We have analyzed this market. I believe that the odds are that we move up through this area here, this big bar I have here, because it's an area of low
market data connection lost.
Low volume well. Very little to keep us here. So we're going to move through there quickly if we do get up in that area. And that's what we're trying to do right now. We're trying to get up into that area. If we zoom in on this. Let's see, get a good picture of this. So that's what's happening here. We are trying to
market data connection reestablished.
Yeah, I'm trying to get this this thing here to work. Alt Command. Right there. If we can get up into this area, I think we have a very good chance of moving through here very quickly, maybe in another day or two, and moving up and then consolidating right here. Maybe testing this right here, and then moving up. Now, the other possibility is that we don't manage in the next couple of days to get into this area, that other news comes out which keeps us down here. And then we start churning here and eventually move down. This downward move, those are the evil statists that are trying to do that. This upward move, this is our current administration and most good people that want better things in life. This is where we go, I believe, up if we get the wall. This is where we go down if we don't get the wall. How's that? Now that's something controversial to say. And I feel really bad for those good people that are in the Democrat Party that have feel like they have no choice but to support their party. That may still be like classical liberals that believe in freedom of speech and freedom of assembly and all the other wonderful freedoms that we have that I think most of us believe in. But they're getting caught up in this growing leftist movement that is trying to keep us down and move us down, destroy us. I know this is a little political, but politics, I think, play a very strong role in where our economy goes. Probably the principal role. They're not moving up until they solve the government shutdown. Well, that's what I equate to getting the wall. So we need to seize back control, and I agree with what Nick is saying here. Right now, the Democrats, the leftists, the Chuck Schumers and Nancy Pelosi's, and who have adopted a wild leftist viewpoint, they feel like they have control, that they can win this argument, win this battle of border security, open borders. We must break their back, figuratively, so that we can move up. It is true that the mainstream media does control the thinking of a lot of people, but I think a lot of people are starting to become weary of the mainstream media. See, that's a very hard thing, Robert. You know, do you take the extreme right or the extreme left? Both are bad. The problem is that we haven't really experienced hard right. So, until we do. And in fact, both of them are authoritarian. That's what a lot of people don't get. On the left, it turns into tyrannical authoritarianism. And I would say that even if you get to the ultimate far right, it's probably the same thing. They both lead to that. And right now, what a lot of people consider far right is really classical liberal. It's so ironic. I think that that's the place where most good people want to be, you know? Freedom. Freedom of the individual. You know, I keep on seeing on Twitter a lot of people talking about we need to preserve our democracy. It is the one thing that we need that will keep us free. And that is, those are leftists, those are statists saying that, because they don't understand that democracy is not freedom. Democracy is rule by mob. Pure democracy in a very large system does not work. That leads to collectivism. We are a representative republic where the ultimate power goes down to the individual, where you have a truly decentralized politicization, civilization. That is where true liberty is. And that's what we're trying to hold on to, in my view. So anyways, that's all I have to say for today. Again, if you're interested in the artificial intelligence trade alerts, they're doing fantastically well. We will have some more alerts out tonight, and I'll talk about them tomorrow. For now, everybody, thank you. Good luck to you. And I hope you have a wonderful rest of this week and moving into the new year. I will be here for tomorrow, Thursday, Friday. Well, tomorrow's Thursday, Friday. I might go right through the weekend, right to the end of the year, just for the hell of it. Had to take yesterday off. Did lots of family stuff. And I hope you're all doing wonderful things this week. Take care, and we'll see you next video or next stream. I'm going to start producing some, some other shorter videos that aren't live like this, and start getting those out there. But everybody, thank you very much. Make sure you hit that like button and share this video out there. We'll talk to you later. I'm going to stop streaming now. Bye.